Right, welcome everybody. It is Wednesday, 29th of July, 8:04 a.m., and we're going to go through the London trading session today. Um, right, what has happened overnight? That's, before we even, speak about anything else that's obviously happened. So there has been escalation. So obviously with escalation, pumps up gold slightly. We've had a pretty positive Asian session, and it pumps up oil. Look at Asia here, boom, straight up. So that's obviously one thing that has obviously happened, and obviously all of today is going to be the expectation of. If I click on today here, not much happening. All right, this CPI data, inflation data is no surprise. Everyone's data for June was calling, so markets have already priced all of this in, so it's no surprise. This is the big one here, and we've got nothing in between. All right, we have got nothing in between. In regards to yeah, new data coming out. All right. So what have we got at the moment? We've obviously got escalation. Yeah. All right. There was, we'd had 3 nights off, and yeah, Iran claiming that they've come out and obviously tried to target US bases. So yeah, that's and also what is that going to do? All right, that's gonna probably not pump gold up like up to all-time highs, but what it's gonna do is gonna limit the downside of gold. All right, now. One thing that I am looking at this morning, all right, is something else that's been quite interesting. So especially the top 30 companies, right? This has been propped up, right, by the AI, AI market. All right, everyone has overvalued the AI kind of sector in the stock market. This little piece I'm gonna go into here. It's one you can bring out and impress your friends on it, join your lunch break or snack or whatever So you know what you're speaking about. All right. So probably one of the top companies in Nvidia, all right, has had a big sell-off here. Right. We've got another one coming out of, I think this is out of Korea. They are, huge, suppliers of chips for AI. All right. The AI bubble, what's ended up happening, lots of hedge funds have had very similar positions because the AI market has obviously been over valued. All right, and so what's ended up happening? They're starting to unwind lots of these positions here because they are getting a bit worried that the whole, market has overvalued AI. So I think Monday had a massive drop, probably their biggest drop yet. Nvidia went from 208 to basically 198. So 5% drop. If you look at SK Hynix, they've been just plummeting out the sky. If you look at, they're almost down 10% today. So it's quite interesting to watch this. Now, why have I brought this up? All right, because money flows, all right, and there's probably, if you imagine the drivers of the FX markets, so probably these guys here, and then we got the rest of us here. So if you imagine the drivers of the FX markets are going to be this, and then you got all of us retailers here. Yeah. All right. So wherever this money is heading is important. If it's going this way, we've got to make sure that we're going this way. If it's going this way, we've got to make sure it's going this way. So, we don't get this information. We do in bits, but we don't get this information, so it's really important for us to try and obviously work out where money is flowing. All right. So in regards to the dollar here, what are expectations? All right. And obviously going into tonight, we've got the interest rate decision. We got a 32% chance that they're gonna hike interest rates, so make them higher. And then we've got obviously a 68% chance they're going to keep them the same. This escalation today hasn't helped. So I'm sure Kevin Walsh's speech might have been slightly different. You know, but obviously we do know that he's a hawkish man. He's hawkish meaning he's optimistic, he's aggressive as opposed to Jerome Powell, who was very, very, very much dovish, very cautious, very, very, I'm going to wait and see what happens, and then we're going to tread carefully. He's more, he obviously will be aggressive, but the only thing he can control is the interest rate decision. Yeah, yeah. If you think about it, it's crazy, really, isn't it? How a country, his whole job is to just digest whether to raise or reduce interest rates. It's nuts because that's the only way he can control anything. Um, so yeah, so basically everyone is expecting rates to stay where they are. Yeah, right. No one's expecting an increase potentially in September. They might be looking for an increase, but obviously, right now, I think it's a time just for holding tight. Donna's in a good place. I think everything's, pretty much where they would expect it in times like this, but I do think they still need to curb spending. It's the responsible thing to do, and obviously the only way to curb spending is to keep interest rates higher. All right. Why is that? Because mortgage rates are higher. You know, if you want to go and buy anything and get credit, it's higher. Everything's higher. Yeah. If you want to save money, it's higher. So they control an economy by the interest rate, because everyone's likely to, just hold tight. And obviously that's what they want. They don't want everyone spending in crisis. All right. And so, think about it a bit like that. If an interest rate was, I don't know, say 1%, everyone's going to look to buy a bigger house. Mortgage will be cheaper. Fix that for 5 years, you're chilling. Or if you can buy a car and it's almost interest free, you will then you will more than likely upgrade your car, credit cards get tapped into because companies have got off, and then obviously with that on a, more commercial scale, companies can borrow money because they can borrow it, they can take on extra staff, they can upgrade equipment. Upgrading equipment uses other companies, staff obviously helps with employment, so all of this helps growth. Now, the only worry about obviously keeping interest rates higher is it means companies obviously tend to squeeze in too because obviously they're worried about inflation, they're worried about escalation, so then employment starts to come down, so all of these things contribute towards yeah, towards how how an economy is kind of, flowing. All right. So I'm expecting. We always look at the probabilities of obviously what's going to happen. All right, is there? And I'm going to change it slightly. Yeah, no, we'll keep it same. Is there a probability? Let's just make it a little bit bigger of this area being hit, or is there a higher probability of this area being hit? All right. Now, I personally, we've got it wrong Monday and Tuesday, but we've done pretty well. I'm expecting price to come back up here, if I'm honest. Why? Because, yields are holding here. We've obviously had escalation. We know that escalation pumps, yields higher. All right. Oil, tapped into this 80, rejected, you know, escalation's going to pump up oil. What is oil priced in? Dollars, so I'm expecting oil to kind of creep up a little bit higher. Yeah. So that's obviously two reasons why I think that the dollar is going to creep up higher. Now, the interesting thing is, I do think gold is going to creep up high. Gold is at, lows here. It couldn't break through here. So, yes, I'm expecting gold to kind of probably pump up a little bit higher, potentially come into this 0.75. I mean, if you look at how quickly things kind of, move, let's just have a look at gold on an 8 hour because I'm not actually going to trade gold on the intraday today. We've obviously got let's mark out Asia. So I'm going to mark out Asia here. We'll start off gold, yeah? So gold, we've got Asia high, Asia low here, yeah? Now, Asia's been pretty small. All right. So that to me means I think we're going to have a reasonable London and then an explosive New York potentially towards the end of the day. So what would I be looking? My kind of entry would be around Asia high, and it would be something like this. Let's just have a look at this here. It would be something like potentially 450 and 250. Let's do something like this. There we go. That is where I'd be looking to enter. My goal would be to take it up to obviously this high here. Um, which I think is realistic. So as soon as the only kind of danger we've got is this area here where we're currently coming into. So I'm expecting a little bit of a rejection here. If I get rid of this, I'm expecting price, pop up here, come down, tap in, break through, retest, come up. All right. That's what I'm expecting, if I'm honest. So that is what I would expect to kind of happen here with gold. Feel free to write these down. So anywhere from 44041 to 4032. Anywhere within this area. But basically, it's Asian high. It's gonna have to come back and obviously retest it. It's not retested yet. It's not just gonna blast through. So my ideal entry will probably be 4039. So that would be my ideal kind of entry to take this a bit higher. So yeah, that is gold. Prop will be looking to buy today on the lower time frame. So yeah, right. Next ones I'm going to look for here. This was our trade from yesterday. Um, let's just let's just move this out the way and move these out the way as well. Because what we want to do here is obviously one, identify right how much has Asia moved, not too much. And also how's the daily been, moving here. It's been messy. All right, you can see wicks flying around everywhere here, and it's not been flowing smoothly. Lots of small, small trading, sessions here. Um, so I do favor euro to the downside, if I'm honest. So if we were to, obviously, London has come up, tested Asia. All right, so let's have a look here. So that is our Asian high. This is our Asian low here. All right, and if we're looking on a daily, previous daily high two, we've tapped into, we want to I'm just going to get rid of this. We want to also mark up, I think, this previous daily low because I actually think this could get tapped. If that breaks, if you want a continuation trade, potentially this one here because we're going to be going with the dollar. All right. Now, again, I want to be playing this a little bit safer, but I also want to be realistic. Let's just have a look at where dollar is. It doesn't have to pop back too much for us to obviously want it to pop back up again. So I'm not going to go crazy here. Potentially, I think 1.4 here would be a good angle here. 1.4. 420, right. I think something like this. I mean, we could go a bit smaller actually. We could go 150, something like this. There we go. Now, remember obviously what I mentioned to you guys is, we've got to be playing this, safer. All right, because we don't really know, what's gonna, yeah, how markets are gonna react. It's not really telling us a lot at the moment. So let me just put all these entries in, and then you'll be able to see. So it's much easier if I leave these on actually. Right. So we're going to go with the dollar because of, oil pumping, yields pumping, um, and obviously, so I'm going to go for our TP1. Let's go around here. Right. So tar we're targeting these lows here, TP1, TP2's here. We obviously know that we've got our Asian low here. So I'd rather secure some profits before we come into that one. Um, and then we've got so go into that one. So I'm just right. Um, so yeah, and then we've got our, stops here. So that is that's euro. All right, and let me put this in. So here we go. Right. GBP USD, we're going to go for here. Now, we've got obviously a lot of support on a lower time frame here. We're going to put the previous daily high in, right? Even though it's told us absolutely nothing. And I'm going to play this one a little bit safer. Asia, we've obviously got Asia here. So Asia, let's just leave these on. All these are doing is just giving me some kind of markers. All right, so that's Asia, that's London. So VAR or the previous day. Right, I'm pretty happy with this because yesterday come into this level here and then tried to retest it. I'm actually going to play this a bit safer and I'm going to go for probably 100. Uh, but I'm going to make everything a little bit smaller today in regards to, stops. So that's what we're looking for here. We'll do our normal 20 pip stop, 40 pip take profit. So this is your, I think we can actually take this one a little bit further down, actually. Let's take it down to these lows here, because if it's gonna go, it's gonna go. So we don't need to worry about that. Right, let me just mark these up here. And I will, one, two, three, four, five. Right, so that's our stop here. Stop. We got TP, that's our entry three. Oop. We got entry two. We got uh, entry one. TP1. Let's go a little bit higher. TP1 and TP2. TP2. Right. Copy image. And we're going to put this in here as well. GBP USD sell trade idea. Right. Next one I'm going to go for, I'm going to leave Aussie, right? Because we're trading with the dollar here. Aussie's heavily linked with gold. We're expecting gold to pump up. Yeah. All right. So naturally, that's going to inflate Aussie. All right. So we're going to leave Aussie. It's already obviously moved quite a bit. And then we got USD JPY here. I actually like a buy from here just into these highs. So I'm going to get rid of this. What you have to remember about yen has got an indirect correlation with yields. Yeah. All right. So if yields are screaming higher, that's going to drag, that's going to, lower yen. And so in turn, it's going to push up AD USD. So, but I'm going to play a little bit safer. Let's just go to daily wise. Wow, it's dropped massively, isn't it? So we're going to go previous daily high. That can be our overall TP, but obviously we need to make sure we are below the low. Asia, massive Asia here. Um, so let's wait and see. I kind of like the idea of trading it from here, but we'll have a look what that looks like. So 425, yeah, I like that. I like that a lot. So we're obviously wanting it to come down. I mean, we could be slightly more aggressive here. Maybe go 450. What's 500 look like? 500's here. I mean, that's the ultra aggressive move here. I'm gonna go four. Let's do it in between. All right, 4 and 7 5. Right, somewhere in between here. I'll be pretty happy with that. So we have our stop there. Sorry, and then we're going to have a 20 pip stop, which I'm happy with. It's below. All right. So if we start from the top, we're going to do stop loss. These are entries here. And TP1, I want to be pretty reserved with this one here. So somewhere here. So we're looking for price to come down before it goes up. But I do think this is just going to blast straight up. So, but we'll obviously have to wait and see what happens here. But hopefully you guys can obviously understand, front loading your confluences with macros by trade idea. Um, really helps you, because yeah, you end up having those reasons why you obviously know the direction that you want to take things in. So yeah. Right. Let's have a look through some of these questions. Alex, what do you think about the outcome of the interest rate decision? I think I've gone over that one. There's 32% chance of an interest rate hike and 68 of, no hike. So I think it's pretty obvious. Um, morning messages. If rate stays at 3.75, I assume the market has already priced this in, but what reaction should it have on the dollar? Right, this is a good question, this, because it actually depends on how confident he speaks. All right. And I know it's a bit crazy. I've gone over it a few times in boot camps, but you need to look at tonality. Yeah. All right. And so you always need to look at tonality. And it's how he speaks, how confident he is, whether he's going to give away anything about them increasing interest rates or whether they need to, see in his last speech, he kept his cards very, very close to his chest. But in this in this particular speech, who knows? He's like obviously Jerome Powell had. He's got a lot of pressure on trying to reduce interest rates from Donald Trump, but obviously Donald Trump is the one that's creating this war, and obviously it's causing inf inflation because oil obviously I think hopefully everyone is aware now how much the world revolves around oil, So because oil prices up, we've got an inflation crisis, So have a little think about outside the box and obviously who controls oil, So technically the controllers are that's obviously one thing that China can't control, is oil. So they can control everything else. Those that they're the guys who are obviously mixing up the AI industry because obviously they're producing chips cheaper, and obviously that's what's devaluing the AI, market. So that's what obviously is making everyone think that the AI market is inflated. Jonathan, will gold do some liquidity grab like drop into 4K? Let's have a look at gold here. Gold 4K is weighed down. No, no. Right? Have a look at, how much it moved in total yesterday. We already know as well that fresh escalation, all right, fresh escalation will, boost gold. Yeah. All right. It's gonna give it a little kind of tailwind. We've also got to work out this money that's coming out of these AI these AI, stocks. Where's this money going into? Where would you short term put your money into at the moment? I think gold, it isn't going to pump, but I think gold is a pretty kind of, pretty, safe bet here in regards to, potentially, um, just holding around this area. I can't, see it breaking, back below 4K. I mean, I mean, it's broke back there previously, but it's rejected really hard both times. I'm expecting it to be probably comfortable about 4,200. So potentially everyone's kind of hedging, putting a bit of it into gold, especially because this escalation, but it always gets trickled in. All right, because yeah. Um, Alex, who decides what the forecast will be for the interest rate decision? Yeah, pretty much everything's tailwind. But to be honest, I'm going to look into that question because I haven't ever been asked that, and that is one that I cannot 100% answer. But yes, if you look across obviously every calendar, the expectations are always the same. So I've always presumed that it's a bit like when an event happens in the news, right or wrong, every news channel is telling you the same story because it's the safest way. All right. Where do you find the percentage chance of rate change? You've just got to, read through, read through anything. I've got a Bloomberg terminal. I look at investing.com. I look at, um, yeah, loads of different things. One of the great, sites for beginners, to kind of that's where I really started learning about news because it's quite beginner friendly. fxstreet.com. All right. Yeah, if I was to type it in, FX Street, all right, you can see here that and I'll show you news here. Go to forex news. Don't obviously take everything in. Just focus on what you need to. But there'll be loads and loads of articles that you can read through. And just I think in regards to, macros, watch these, lives, but start to spend, I don't know, 15, 20 minutes if you're on a train or if you're having your breakfast, or if you're having a coffee or, just spend like 15 to 20 minutes. We probably all, I mean, I don't scroll much, but, I reckon probably 80% of you here might scroll for 15 minutes, when you wake up, Instagram, TikTok, Facebook, LinkedIn, Twitter, spend it actually, yeah, spend it planning a bit because it's, something that you can do in bed with a coffee. There's kind of no excuse here. And if you, I've always said to everyone, if you do that for 15 minutes a day, then you will, yeah, start to obviously understand what's happening and why. Jem, morning, Dan. Do you have any tutorials on pair correlation? Yeah, I've got it in my course. I'll put my course in again, um, on probably Saturday. So yeah, it's got everything. It's got all the old boot camps in it. It's got everything. iPhone 4. BTC plays with my head with sec pumps. Lol. I hope dumps hard today and makes up its mind. Let's have a quick look at BTC and then we'll obviously end this because I need to look into everything. So Bitcoin, obviously you guys know I am not a intraday Bitcoin trader. I don't like it. I don't claim to kind of like it. I mean, Bitcoin right now is completely in, no man's land here. All right. It's just crazy to try and trade it. It doesn't act like FX markets. No, you need a totally different strategy. The only thing I find interesting sometimes with Bitcoin is I sometimes have a look at it over the weekend. If you're trying to work out what the dollar could potentially be opening like on Sunday. And Bitcoin's absolutely tanking. You tend to see dollar kind of open strong, all right? Or if Bitcoin's pumping, because it's priced against the dollar. Yeah, you sometimes see the dollar, tanking. But remember, crypto is driven from hype. There's no technicals. There is nothing technical about it. There's no, macros. It's just hype. All right. If the overall consensus is to buy crypto, because of that, and I genuinely believe that's why the halving was created. Because what does the halving do? Oh my God, half the Bitcoin's gone. Now we're going to have to buy quick before everyone else buys it. It's really smart, really smart. So that's why the halvings happen. Because it recreates hype, because if there's less, supply, and because there's less supply increases demand, because it's like the halving's coming. It's like some medieval thing. But yeah, it generates hype, all right, because half of it's gone. Oh my God. So yeah, just always think about it. So yeah, you're a USD triggered. Let's have a quick look. That's obviously our plan. We obviously want trades to trigger. So yeah, it'd be interesting to see. I mean, obviously, if we burst up, I'll be probably looking to come out. But obviously, if we start to, slow, we could see a nice little wind out here. We got dollar is pretty safe as long as this level here holds. So yeah, let's wait and see. Yields still holding around this area here. So yeah, right. Hope everyone has a good Wednesday. And yeah, let's make sure we have a good day, team. Have a good one.